Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Let's quickly run you across to see what Asia's been doing as a pocket this morning. Subdued trade, not much happening out there. Absolutely flat, and so is the case with the SGX Nifty as well, which is trading with minor cuts, 20-odd points given up. But yesterday's session was in fact very encouraging to see the index pull up the way it did. Banks almost 1% higher, and the kind of ferocity with which the last 3 or 4 days have been, and the cuts that have come in. So heartening to see whether or not we can actually build on yesterday's gains in today's session, because there was a lot of trading also that took place yesterday.
Yeah, bulls needed this. Let's see if this lasts or no. But the coronavirus scare is alive and kicking in the rest of the Asian pack. US wasn't quite active. We don't have a great set of numbers to work with today because the few results that came out post-market hours weren't the best. So the Qs aren't the best. Let's wait and watch.
And the numbers that are going to come out today, so JSW Steel, Ultratech, maybe the silver lining there is the pricing aiding the dip in volumes for Ultratech, but all of that will have to be awaited to see how that shapes up and when they report their numbers. But JSW Steel, no earth-shattering numbers expected. But also important to keep an eye out on what's been happening in the futures and options space. Yesterday was the F&O weekly expiry, and we did see an enormous turnover, Navneet. Does that signify anything?
Yep, as we highlighted yesterday itself, there was a lot of room for short covering as the index was taking support at the 50 DMA, and that's exactly what panned out. Even if you look at the futures data, it was a clear short covering bounce which came in on a weekly options expiry. So for the futures, you did see the open interest for Nifty, which was down about 2%. For Nifty Bank also, we saw a huge amount of unwinding coming by as the open interest fell by about 13 to 14%. Remember, there were a lot of shorts being built up on a Nifty Bank. What also supported the index was the volatility index, which fell by about 3%. So it's still hovering around those elevated levels of 15.8, but nothing to worry about, because ahead of a crucial event like budget, you tend to see India VIX moving higher. In terms of setup then, maximum open interest now, this is the monthly expiry, is at the 12,500 call, and on the put side, it is at the 12,000 strike. So we are looking at a very wide range, but in terms of call writing or put writing, which came in yesterday's session, we saw more of put writing actually, as the open interest on the 12,100, 12,000 as well as the 12,200 strike did see a lot of build up coming about. Narrow range will be the 20 DMA at 12,000, 50 DMA 12,100, and 20 DMA which is at 12,200. So watch out for that one. In terms of individual stock futures, then you had pretty much a lot of stocks which were in focus, and NIT, by the way, had a wild move towards the end. Towards the end, the stock was up 9%. I think on closing basis, it was just up about 5%. Long positions were seen. Ramco at 52-week high witnessed fresh long positions. L&T, which reacted positively, saw short covering in yesterday's session. And India Bulls Housing did rally about 5 to 6%. We did get the data. Credit Suisse has bought about 0.5% stake here. And very quickly then, FIs bought in the cash segment, but on the futures, they continue to build short positions on the index futures. Nearly 5,000 contracts added there, and they are still net short on the index futures. That's the ratio, 47 to 53%. With that, it's back to you guys.
All right, Namni, thanks very much for that. Let's also bring in T.S. Harihar, founder and chief executive at HRBV Client Solutions. Hari, thanks very much for taking out the time. Saw a little bit of a recovery coming back in yesterday's session, but does that do much in terms of stock picking and how you would look at individual stocks now on the back of earnings?
See, I would rather wait for the budget, because if you look at the 800 points correction that we saw between Monday and Wednesday, I think that was led by a couple of factors, and the primary factor being the IMF downgrading their GDP from 6.1 to 4.8%. So at a macro level, yes, there are concerns. I think inflation is a concern. What is still uncertain is, while the halwa ceremony has been done, it is not very clear as to what is going to be the thrust of the budget. Because unless I think this budget comes out with some very, very strong, I would call a retail push or a consumption push, I think the markets are going to be extremely disappointed, because we already have a market that is richly valued, very close to its all-time peaks. Growth is not happening. GDP growth is faltering. So I think, frankly, I would probably wait for the budget, wait out probably the next, I think, 6 or 7 days, let the budget get through. I would, by buying into banks, consumption, assuming that the finance minister has a lot of shops for in terms of tax cuts, in terms of more spending, in terms of lower GST, then I think consumption is a story we do like. But at this point of time, I think there's too much of uncertainty. We're just staying off at this point of time.
A lot of numbers that we all working with, Hari. Yesterday saw HDFC Life come out with numbers, and therefore we have got all the life insurance companies out with their numbers.
Yeah.
Do you track them closely? What did you like or dislike about these numbers?
I think HDFC Life was probably a little disappointing because we thought that the margins and the growth that they'd shown was slightly below what was being expected. But I think that is bound to happen considering that it's a highly competitive market. There are at least 4 or 5 players like SBI, HDFC, LIC who are fighting for a market share. But what we believe is that over the next probably 3 to 4 quarters, there could be an increasing shift of business from LIC to these non-public life players, and I think that would benefit people like SBI Life and HDFC substantially. So we continue to be positive, but again, as I said, we are waiting for the budget because we do believe that the budget could have a lot of SOPs, in terms of expansion of Section 80C, probably inclusion of pension insurance plans under the NPS limit. So if any of those kind of things happen, then I think a lot of these life insurance companies suddenly start looking more attractive.
But wouldn't that then make the stocks already more expensive? Wouldn't it? I mean, would the investment in any of the life insurers be subject to a budget SOP, or would you otherwise also be finding them attractive?
I think if you look at a 1-year perspective, then you can probably buy in even at these prices. But okay. I'm looking at more short-term momentum because the problem with most of these stocks is that the short-term momentum is missing. And I think that could come if the budget has something like an 80C SOP or a pension clubbing under NPS. I think those could be short-term boosts as far as the life insurance is concerned.
Okay. Well, we'll watch out for those names as well, but Hari, stay on. So much more to talk about. There are a clutch of results that are going to come out. There is some stocks in news and some results that have come out as well, which may or may not have looked very, very attractive. So let's talk about the results that are likely to come today and some key stocks in news and movers as well. Somit, Agam as well as Nikki join in. Well, let me start with the lady first. Nikki.
Okay. Ultratech numbers, well, good set of numbers that we're expecting out of the company. Top line performance for that matter, we're expecting at 17% uptick. Operational performance too is expected to see some amount of traction. 45.5% is the number that we're working with year-on-year basis on account of the benign cost pressures that in this quarter most of the companies, including Ultratech, would experience. Margins at 20% as compared to 16%, and PAT is too seen higher. 3 essential parameters that we like to keep an eye out. First will be the sales volume. That number is expected to be muted on account of lackluster demand, 3% down year-on-year basis. But then the realization, pricing power to an extent has played out in Q3. That is expected to aid. EBITDA per ton performance essentially is going to be aided by the easing cost pressures overall seen by the cement industry as a whole. On account of that, the key number that keep an eye out will be 1,000 rupee per ton. This compares to nearly 667 rupee per ton that we've seen in the corresponding quarter. The easing cost pressures that have played out in this quarter would be the lower manufacturing cost, which includes both power as well as raw material. Apart from that, we're also seeing petcoke pressures that essentially prices have eased off. Stable freight rates, they have also contributed to expected to be contributing towards the EBITDA performance of the company. Also, we're looking at JSW Steel, not pretty set of numbers at all. In fact, if you look at the Q3 performance, the EBITDA number rather that we're expecting is expected to be the lowest that we have since Q4 2016. Top line performance 12% downtick, EBITDA 43% downtick, PAT seen down by 74%, volumes look higher at 10%. This comes even after the fact that the volume performance of the company, specifically standalone business, that's done well, 17% uptick there. But then the EBITDA per ton performance of the company, we are expecting a hit out there, 49.8% decline year-on-year basis for JSW Steel. What has played out for JSW, or what is expected to play out for JSW Steel, would be the realizations and the overseas subsidiary losses, which are expected to have a bearing. For realization, you have the HRC prices which are lower, and also the auto contracts which have been renegotiated at a lower price.
Thanks a lot for that, Nikki. So those are a couple of numbers to watch out for. Now, the numbers that have come out thus far, let's save the bad news for the last. Let's talk about all the mixed set of numbers. So the stocks in news as well as some result reactions, Somit.
A lot of the 4 key earnings that have come out, Agam will be talking about Zensatech and HDFC Life we have already talked about. So I'll talk about the other 2. So firstly, Biocon, the results were below estimates. The revenue growth was led by small molecule biological and research service segments, while the branded formulation revenue was down nearly 26% compared to last year. Lower raw material costs did aid the margins of the company, but the net profit was impacted by higher taxes. Secondly, Cholamandalam Investment and Finance. Now, in this quarter, weak asset under management and disbursement growth was seen despite a seasonally strong quarter. The AUM growth further moderated to 20% from a 24% growth rate in the second quarter. Asset quality deteriorated for the NBFC, while the NBFC also toned down its branch expansion plan to around 1,100 branches from earlier 1,200 branches in the first quarter of financial year 2020. In other stocks to watch, firstly Infosys, because of reports that are saying that SEBI might probe the whistleblower allegations against the company. Secondly, KEI Industries, because the QIP opened yesterday and the company is looking to raise nearly 400 crore rupees with a green shoe option to raise another 100 crore rupees from this QIP. Now, the SEBI calculated floor price for this QIP is at around 518 rupees, and the issuer can offer a discount of 5% to this floor price. Now, if the company raises nearly 500 crore rupees at the floor price of 518, then the equity dilution would be close to 10.8% on the expanded equity base. Electra Greentrek, because they have received a letter of award to deploy nearly 555 electric buses in 8 city and state transport authorities. They have received this award from 8 city and state transport authorities. And lastly, India Bulls Housing Finance, on the back of a bulk deal where Credit Suisse has acquired nearly 22.9 lakh equity shares, that is 0.5% stake in the company.
Okay, we'll watch out for Chola, and we should watch out for Zensar Tech. Agam, what went wrong here?
Well, it's seasonal weakness to a certain extent, but for Zensar, it was a little more pronounced. So on a sequential basis, we did see revenues down around 5%. We saw margins contract drastically to just 2.8% against 10.5%. Net profits consequently declined by around 50%. Now, there were a bunch of customer ramp downs, which is why we saw such a dip in not only revenues but also in margins. There were also the fact that furloughs and volume discounts which impacted margins to the tune of 350 basis points, and we've seen a decline in all geographies. But again, this is largely on account of the volatility that we've seen in the retail vertical, and of course, well, on the whole, the ramp down in clients, which is why we're seeing such a weak quarter three for Zensar Tech.
Okay, we'll watch out for this one as well. So Agam, Samit, Nikki, thanks so much, all of you, for putting these into perspective. Hari, by any chance, have you looked at Zensar Tech numbers and the stark contrast that it has shown to some of the other mid-cap IT names that have come out with results?
No, we don't look at Zensar too closely, so I'm not too sure what exactly is the story out there. But yes, what we are seeing is that we do expect some kind of a pressure building up on most of the mid-cap IT names, because unlike the larger ones which have been able to get a bigger share of digital, I think a lot of those mid-cap companies have actually struggled to expand their footprint on the digital side. So I think that probably explains why you could see some pressure as far as the mid-cap IT names are concerned.
Okay. Yesterday's session, saw PVR reporting its numbers, disappointed the street a bit, but now does that lay more focus on what Inox can do? Because the stock has been running up.
See, actually, if you break up the PVR numbers, there are some things that I thought extremely interesting. For example, if you look at the food and beverage spend, which is a part of the overall profits, that was up by about 11.5%. So that is a kind of a growth they haven't seen in the past. And that is one area where the margins are much higher than the core cinema business. So, I would believe that what we have seen on PVR, probably the overall numbers may not have been too attractive, but if you look at the food and beverages part, which is the more profitable side of it, I would believe that it is positive as far as PVR is concerned. Yes, in terms of valuation, Inox still has an advantage because it's a little more low priced in terms of value compared to PVR. But the kind of a leadership that PVR has built in terms of its network, in terms of its reach and profitability, I would believe that the leadership should continue. So probably some kind of a disappointment over the overall performance, but I think once the reality of the food and beverage part dawns, I would believe that the stock should actually do well.
What about some of the other diagnostic companies? None of them have reported yet, so we're going to be waiting to see whether the excitement around buying these stocks is justified.
See, what has happened in the last probably I would say 3 or 4 quarters is that there seems to have been a shift out of pharma into 2 specific areas. I think one is diagnostics, which they see as I would say a low risk business, and the second is of course hospitals. Hospitals is a very specific case. Like if you look at stocks like Apollo up 35%, Narayana Hrudayalaya up by about 95% over the last 1 year. I think in most of these cases the capital investment cycle is more or less over. So now I think from here on it's going to be ROI all the way. So I think that is one thing about these hospital companies. Regarding the diagnostic companies, well, we really need to see the numbers over the next 2 or 3 quarters because we have a limited history of about 1.5 years, nothing more than that. So we need to look at it for a couple of more quarters. But I would believe that if the original, assumption was that the government's mass insurance plan would create a big business opportunity, but that has not really materialized. So as of now, I would believe there is a lot of assumptions as far as these diagnostic companies are concerned.
Larsen and Toubro reported its numbers yesterday. I mean, while overall the core infra business was a bit of a disappointment, their order book guidance maintained, their revenue guidance maintained, seems to have excited the street because this has been a clear underperformer. Yesterday's session, you saw that big spurt coming in. But nonetheless, do you feel that Q4 maintaining this guidance could be a challenge, and that's going to put a lot more pressure on Q4 considering the last 9 months' performance?
See, a lot would depend on government spending. If you break up the revenues, I think about 36% of the revenues are coming from international. So I think that is something that is less cyclical, and they have a lot of exposure to the hydrocarbon segment. So that has been a little less cyclical. But a very big chunk of the contracts for L&T comes from the government of India. And the reason the stock has been under pressure in the last couple of quarters has been the number of order cancellations across states like Andhra Pradesh and Maharashtra, where they decided to arbitrarily cancel orders and bid for fresh orders. So that has not gone down too well as far as many of these, these capital goods companies are concerned. So till the time there is clarity that government spending is going to pick up, infra outlays will be larger. Order book is fine because 36% is international, so that is not very vulnerable to domestic realities. But I would still believe that till the time government spending is really committed over the next 3 or 4 quarters, we would not be too positive on Larsen & Toubro.
Okay, Hari, stay on. So much more to talk about. The clutch of other results, the likes of Cholamandalam Investment and Finance, as well as Biocon, which disappointed the street. And remember, Infosys is in focus once again because SEBI may probe the whistleblower allegations against the company as well. So 2 or 3 names that you need to focus on. But focus a bit on the charts as well. Kunal Rambhia, founder and fund manager at the Streets, joins us right now on the show with his thoughts. Kunal, good having you. Thanks for joining in. What's your index call today, Kunal?
Hi, it's a long time now connected actually with the Bloomberg. If you talk about the structure of the Bank Nifty and Nifty, I think Nifty weakened a bit, but Bank Nifty just spoiled the entire structure in the midterm. So, we saw a massive correction right from 32,300 on the lower side to 30,600. This was a staggering correction, and on the chart, we generally label this as a head and shoulder formation. Technical small bounce is likely, but otherwise the structure remains very weak. On Nifty, I'm expecting, on the lower side to reach somewhere near to 12,100, keeping the stop of say around 12,230, which is a near-term resistance. As far as Bank Nifty is concerned, there is a small technical bounce expected there, but the resistance seems to be near to 31,300. And keeping the stop loss of 31,300, one can think of shorting the Bank Nifty and with the target of around 30,300.
What about your stocks, Kunal?
In this recent season, we saw few of the IT companies outperforming the benchmark, and at the same time, there were few mid-caps which gave a positive breakout. So on a very short-term basis, if someone wants to play long, then one stock is Endurance Technologies. That counter was in decent consolidation since 1.5 months. Yesterday, it gave a decisive breakout. Although the volumes were pretty less because of dryness in the counter, but yes, the consolidation breakout came yesterday itself. So, someone can think of buying in the morning session itself, during opening session itself, keeping the target of 1250 and the stop loss of 1050. One can go long on the counter. Second counter, which I think can be a decent long, is on the metal front. That is Jindal Stainless. This stock gave a decisive volume breakout last week itself. Recently, again, under consolidation, yesterday it was positive. All the metal counters valid, and this was not an exception, of course. Keeping the stop loss of 42.5, one can think of short-term target as 48.5, 49 kind of levels. This structure is very bullish. If at all this continues, then this can be taken in a portfolio for longer period of time. And one thought, The laggard of the market for time being was Maruti for a couple of days. Yesterday, when the markets were doing pretty good, this stock was near to low itself. So I have a bearish call on Maruti, positional bearish call certainly, keeping the stop loss of 7,300. One can expect the target of 6,500 in mid-term.
Yeah, well, there was a sell call on Maruti in trade yesterday as well, so it looks slightly wobbly. Let's wait and watch what happens here. Shubham Agarwal, see you at Quantsapp, also with us on the show. Shubham, good morning. What is your sense on the index, Shubham? Yesterday the bounce, would you sell into that or would you be sanguine about the prospects?
Hi, good morning, Neeraj. First, if you look at the Nifty behavior, Nifty looks like that it is consolidating within a pattern of a wedge, where the supports are placed around the level of 12,050 to 12,100. And yesterday we did see a bounce back happening from that level. So I think some more pullback is due, and we might retest the level of 12,300 before Nifty really finds a direction. So the expectation would be that another 100 point or 150 point of rally can be witnessed from here. So if at all a pullback happens during the day, because the SGX was also indicating that we might have a slightly negative start. So if that happens, and if 12,150 is a level that we can get on Nifty, I think one can look to buy Nifty with a stop loss at 12,050 and a target of 12,300.
Okay, and what about specific stocks, Shubham?
So two stocks on the buy side. The first one is the strategy on ICICI Bank. So the ICICI Bank has results tomorrow, so that's a disclaimer. But if you look at the stock's behavior on the derivative data for a very long time, we have seen that there is a long unwinding cycle, which means that in the recent pullback, we have seen that the OI has reduced, which is indicating that it was not a short built up, but just a temporary profit booking. And yesterday, around the level of 520, we saw that there was a heavy put writer congestion area from where the stock actually rebounded, which is indicating that the outperformance might stay intact. So a bull call spread can be initiated, given that we have results tomorrow, so it's a limited risk strategy. 530 strike call option can be bought and a 550 call option can be sold. The net spread cost is at 6 rupees 75 paise. We are looking for a target of 12 rupees for the spread with a stop loss at 4. And the second call is a buy call on Petronet. And if you look at the chart setup there, it has been in a symmetrical triangle for a very long time. And now the consolidation seems to be mature with the price moving to the apex. And yesterday we had a breakout happening. And if you look at the overall sector, the sector also has been doing quite well. So we are expecting a breakout happening on Petronet. So a 280 strike call option can be bought for a target of 6 rupees with a stop loss at 1.5.
Just hold on. Let's give our viewers a chance to understand both of these strategies. One is a buy on the 280 call of Petronet LNG with a target of 6 and a stop loss of 1.5. The previous one should also come up on your screen for a moment. ICICI Bank, the bull call spread. Buy the 530 call and sell the 550 call. The target is 12 and the stop loss for this strategy is 4. So keep both of these option-led strategies at the back of your mind from Shubham Agarwal. On to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we're looking at Suntech Realty, and the stochastics indicator that is indicating that probably the stock might have been oversold after seeing a sharp fall from the levels of close to around 460 to as low as 380, and now we are likely to see a trend reversal happening. Now, as we always do, let's first try and understand what the stochastics indicator is and how do you interpret it. It basically is a trend following momentum indicator and helps you identify when a move is overextended. It measures the current price relative to its highest highs and lowest lows. Well, how do you interpret it? Overbought is above the mark of 80 and oversold is below the mark of 20. Any crossover that indicates a buy or a sell signal. And now coming back to the price chart of Suntech Realty, and over the daily time frame, what we are seeing on the charts is the fact that the stochastics indicator, which is the one in the lower panel, that has given a positive signal after the fast stochastics line has crossed above the slow stochastics line. Now, looking at the price action itself, Neeraj, the low of the counter in yesterday's day of trade as well as the day before was 380, which is also the low of the hammer candle that was formed in the month of November, from where we saw the stock rally higher. And similarly at the mark of 380, twice it has come down, but it has not managed to close below that mark. So there is strong support coming in at the mark of 380, and at current levels of around 391, the stochastics indicates a reversal. So potentially one could look to go long, is what the indicator suggests is favorable given the current risk to reward ratio.
And what is the risk to reward ratio? What is it done in the past?
So 3 out of the last 4 times, Devina, that the indicator has given a positive signal. On an average over the next 1 month period, on a closing basis especially, the stock has managed to go up by as much as 7%.
Okay, Yash, thanks very much for that. That's Bloomberg Edge for you. Suntech Realty is what we're talking about. I also want to look at AU Small Finance Bank. Yesterday, on the back of its numbers, did exceptionally well. You've seen how the asset quality has improved. Growth is held up impressively across the board for AU Small Finance Bank, and finally ended the day with gains of 10%. Hari, for small finance banks, and particularly AU Small Finance, would you be a buyer?
See, there are two ways to look at it. I think if you look at it in terms of the current valuations, it is factoring in a lot of aggressive growth in the next 2 or 3 quarters. Having said that, what has happened in the last probably, I would say 4 or 5 quarters is that PSU banks have been, largely cutting down on their lending, and that gap has been filled by a lot of the small finance banks. Number 2, a lot of MFIs, who were extremely active between 2011 and 2018, they have been under pressure after the, the NBFC crunch came in 2018. Add to that the kind of issues we have been seeing in places like West Bengal and Assam. A lot of MFIs who are predominantly focused on those areas, they have also come under trouble. So I think all this has opened up a fairly large market for a more organized player like an AU Small Finance Bank and Awas Financiers. I think these are more organized players in the small finance space, and it opens up a very interesting space for them. So I would believe that yes, growth assumptions are aggressive, but if this situation continues, then definitely I think they have a lot of scope for expanding their asset book on a very aggressive way.
Okay, that is the small finance banks that we're talking about. What did you make out of Jeevan's numbers?
I would believe that we still need to see something exciting about this particular, MFI as I call it. Now it's an MFI plus a small finance bank if we include the subsidiary. Let me put it this way. These are early days as far as the MFI business is concerned. We need to give them probably 3 or 4 more quarters. I think that would give us a much better picture of how these stocks are shaping up.
Okay. The other one in yesterday's session that really did exceptionally well in the last few minutes of trade too, saw that big pop coming in despite having a good start to the day, was the Godrej Properties. And Shubham Agarwal, I want to come to you on Godrej Properties. Absolutely dull up until yesterday, where you did see that big pop coming in. There was stagnating somewhere around 970, 980. Saw that drawdown over the last 3 days when there was a sell-off, and now at 1020.
So Devina, this indicates kind of a breakout because as you rightly mentioned, that there was a consolidation, and then yesterday we saw that the price action actually moved beyond the consolidation swing highs. So given now the chart setup, I think the next target for the stocks would be roughly around 1100, and the breakout should see some more follow-up buying coming in. So I think one can look for a stop loss at around 980, and a target of 1100 will be a long trade.
Okay, watch out for that stock. Good move in trade yesterday. Let's see if it perks up even more. From amongst companies that actually delivered numbers and went up was a Granules India, up 7% in trade yesterday, and a Westlife Development, which inched up 9% after, well, a 9% same-store sales growth number too, but more importantly, the doubling of profits and the EBITDA numbers. Did you have a chance to look at those results, Hari, Westlife?
No, I haven't.
Okay, but the McDonald's operator, I think, and he spoke to us as well. He spoke to Agam on the kind of growth numbers that they anticipate going ahead. Do log on to our website and try and read more about that interaction as well. But they expressed confidence about the quantum of growth or the kind of growth continuing in the quarters to come. So that was the other interesting one. We'll watch out for Varun Beverages. I think IIFL Securities has come out with a note saying that it is the top idea. And we'll talk about that maybe a bit later on too, but as in our research team will come and talk about that too. But Varun Beverages, this is the 13th or the 14th straight day of gain. 1 month, it's actually gained about 19%, but more importantly, these gains have come at a steady clip. It's not been a pop of 15% and then mellowing down. It's been a steady performer for the last one all month. You look at this fundamentally?
Yeah, we do. See, what has been happening is they have been in a very niche position, and if you look at the last probably 1 or 2 years, there have been a lot of companies in this sector which have gone into either corporate governance issues, growth issues. Varun is probably one company that has managed to maintain its growth over the last 3 or 4 quarters. I think that is one thing that has worked positive for them. Again, largely a bottling business, so it's a very non-cyclical business. There is a kind of an assured demand. So I think all these things have worked. And if you look at the last 2 or 3 quarters, numbers have been very, steady growth is what the company has already shown. So I think that is working in their favor. And I also had a chance to read the report prepared by IFR, and I think it forecast, I would say, a very aggressive growth as far as Varun Beverage's next 2 or 3 quarters is concerned. So yes, I think if you look at this particular space, this stock does look quite interesting at this point of time.
Okay. Take a look at Z and what it did in yesterday's session. Was the worst performer, was down about 7% in the session. A quick take, Shubham Agarwal, if you do see a further downtick in Z this morning, will you short it?
Yes, absolutely. And in fact, this has been one of the underperformers for a very long time. And if you look at the price action, about 2 days back, we had a breakout, and yesterday that entire breakout actually failed. So I think this down move can continue, and the overall target for a very short-term perspective might be around the level of 260. So after the opening, I think if the reward to risk is comfortable, around the level of 290 is what we can take as a stop loss, and 260 will be a short-term target for a 3 to 4 days perspective.
Okay, then. I'll watch out for Z. So if there is a downward bias this morning, maybe the selling could intensify. Stocks at 279 on close yesterday. 30 seconds left to go for market pre-open. The SGX Nifty is indicating a flat to slightly negative start. We're down about 11 odd points on the SGX Nifty. Taking a look at what we're going to watch out for today, obviously the big names. Once again, the banking stocks which aided yesterday. ICICI Bank for one has been holding pretty steady. Whether or not it continues to do that till we see its numbers come out. Axis Bank too, after yesterday's numbers, the markets actually didn't pay too much heed in terms of what they did in terms of slippages, but the stock actually closed positive. Nifty 50 opens lower in the session, but again a very steep cut that's come in. That's probably on the back of what possibly is happening to Infosys, because that is showing you a 9% downtick. Maybe we'll have to wait and watch, but this is on the back of the possibility of SEBI now insisting on a forensic audit with regards to the whistleblower complaint as per media reports. So that's probably something that's spooking investors around the stock yet again. So 713 is what Infosys has opened up at. You've got Bharti Airtel, Power Grid, Tata Steel, Hindalco, Nestle, Gale, and Cipla, all of them trading under in the session. More stocks in the green though. IOC has opened positive, about 3% odd. Z has recovered a bit, so 1.7% higher for Z. Ultratech Cement ahead of numbers is up 1.3%. Bajaj Auto, Hero Motocorp, SBI, that's at 325 now. Titan at 1200, and this one's actually doing pretty okay for itself. Slowly, gradually moving up bit by bit. So we'll taking a call on that too. And ICICI Bank now at 529. Infosys is still your top loser, 8.5% under. So this is really spooking the markets. What about the other stocks, Neeraj?
Yeah, let's wait and watch if this is how it eventually shapes up at the end of 8 minutes too. What is doing well or otherwise at the broader end of the spectrum? Some result reactions to be watched out for. So Biocon, Chola, as well as Zensar Tech. There are 3 names that you should monitor. Biocon, not the best of numbers. Let's see if it starts off 9% lower. Zensar Technologies, again, not the best of numbers. Chola actually doing okay for itself despite AUM growth moderating. And Zensar Tech, howler of a number as far as the margins go, and down about 5% for Zensar Tech. Yes, it's usually a weak quarter, but this has opened even weaker, or this has done even weaker, and that could be a small issue. I wonder if Vodafone Idea is reacting to the news bits about DOT saying that let's not take action against any of these companies if they miss the AGR dues. well, maybe not so much. 24th, the deadline is passed. Stocks down 4% in the session today as well. What else?
I think it's popped into the green.
Okay, yeah, very, very volatile for Vodafone Idea. So just be careful, just be mindful of these names. And I think watch out for Jindal Stainless. It was an idea from Kunal, I think, starting off slightly lower. Let's wait and watch what happens there. So lots of stocks flying around. We'll revisit some of these once the pre-open rates settle down. Like Trent and Nara and Rodala are also doing okay. But top brokerage calls for the morning. Somit Johnson with a list of those. Somit, what do you have on your radar today?
Well, IFL came out with this note of the top buy call and the top sell call. So I'll start off with the top buy call. Firstly, that is on Varun Beverages, where they have maintained their buy rating but have hiked the target price to 915 from 800. Now, according to the brokerage, Varun Beverages is likely to benefit from the dual tailwind of high growth and low capital expenditure, which will result into a free cash flow and higher net profits going forward. Along with this, improved quality of servicing and increased distribution reach will empower the volume growth for the company, says the brokerage. Now, with leverage on finance and depreciation costs, the brokerage is expecting the net profit of Varun Beverages to grow at a CAGR of 25% over calendar year 2020 to 2022. Now, the brokerage is also expecting a 10% volume growth and a free cash flow of 2,200 crore rupees over the next 2 years from Varun Beverages. The sell call is on Shree Cement from IFL. Now, they have maintained the sell rating with a target price of 13,800 rupees for Shree Cement. Now, the brokerage sees that the risk of EBITDA decline for financial year 2021 with likely resumption of fight for market share in the key northern region in the next few months. Now, it also expects pricing discipline to decline in FY21 in the north region given the increased number of supplies, and and according to the brokerage, this risks are not priced as it will result into a muted EBITDA CAGR of 3% over FY20 to FY22, and thus Shree Cement is the top sell call for 2020.
Samit, thanks very much for that. Infi is still your top loser, not 8% anymore, but still 6%, and that can have a big bearing on the index. So 12,150, Infi at 741. Remember, 10th of January, when it reported its numbers, the internal audit they claimed had said that all the charges that were put forth by in the whistleblower complaint are without merit. But these findings, I believe, are immaterial to SEBI, and they, could look at this in a more detailed fashion, and therefore the possibility of ordering the forensic audit on the back of those financial irregularities that were mentioned in the whistleblower complaint. And the stocks are down 4.5%. Quick word on Infi, Hari.
See, honestly, I wouldn't read too much into that. I'm not sure how much the stock is going to react, but I think the pre-market does look like it's probably overreacting a little bit. Because let's not forget that the SEC is already looking at the allegations. They've already conducted an internal audit, under with the very reputed auditors, and that has really not brought out anything. At least the kind of serious allegations that were made by the whistleblower, I don't think the internal audit got anything close to that. So I think with the internal audit kind of clearing them, and with SEC still not being able to find anything worthwhile to proceed against Infosys, to me it looks more like a bunch of American lawyers will try to make some money by making a public interest litigation or a class action suit, but nothing more than that, because I don't think there is too much of merit to these allegations. Probably sentimentally, yes, there could be some impact, but if I was a trader, I would probably use these opportunities to buy more of Infosys at lower levels.
Okay. Let's ask somebody who advises traders then. Shubham, what would you do with the Infi?
So Infosys, if you look at the price action very clearly, for the past few days, we have been seeing that the price action was positive, and there was a couple of gaps on the upside which was created. And now, because on the news flow, if it starts correcting, I think I would wait and watch, and a lucrative level for me to re-enter would be anywhere between 750 to 760. If at all post this news, if we do see a pullback happening to that level, I think that will be a good buying opportunity. So I would avoid for now, and buy on pullback should be the strategy around 750 to 760.
Okay, let's come back up. We've got Infi at 772 after that initial downward tick that you saw in pre-open. Let's talk about some of the other names that are going to be in focus this morning. HDFC Life. Kunal, do you have a call on HDFC Life?
Yeah, so if you look at the entire structure again, the stock is in decent consolidation since a couple of week. So if you look at the bottom, somewhere 570 was the bottom, and on the higher side 640, and this broader consolidation is still continuing. What we saw recently in a couple of days, the stock started rallying from 600 to 617. Yesterday there was a shooting star formation, but still the consolidation is very stringent. So now if someone wants to go on a short-term basis, then wait for the trigger of this 622, 623, that is yesterday's high, keeping the low of yesterday's low, which is 612, and then think of going long. I would avoid taking a positional bet on the counter due to this consolidation phase.
Okay. Biocon is the other one. Results were below expectations. You had revenue growth, which was led by the small molecular biologics and research services verticals. But aside from that, not too much came out from the numbers. Stocks down about 2.1% in pre-open trade. Would you get into something like a Biocon, Hari?
The numbers were a tad disappointing, because Biocon has typically given good numbers in the last 3 or 4 quarters, but I think in some of the core businesses there has been some amount of disappointment. So let's not forget that the stock has also had a fairly good rally from lower levels. The stock did correct about a couple of quarters back, but I think in the last 1 or 2 months it has rallied quite sharply from lower levels. So I would probably wait, let us digest the results better, because there have been some concerns on growth in its core business. So I don't think I would be really too keen to jump in and start buying Biocon at this point of time.
Even at the end of the pre-open session, the biggest gainer, arguably, even on the Nifty 500, and I'm ignoring the Kitex Garments and the McLeod Russells, is Indian Oil. Another 2.6% higher after the 5% uptick in trade yesterday. Certainly the crude price correction that is on is helping the stock. Yesterday the comments from, I think, maybe it was Piyush Goyal or Dharmendra Pradhan, Piyush Goyal, about how there's a lot of interest around BPCL as well, because when he was at Davos, probably also playing to the gallery. So BPCL as a stock went up, IOC as a stock went up, and these are moving up in today's session as well. Now, Shubham Agarwal, would you trade, if you've not given a call already, would you trade an IOC or a BPCL?
Neeraj, if we look at the chart pattern of both the stock, both are actually completely oppositely placed, because IOC is a stock where a lot of shorts were developed, and the move is more because of a short covering, and it might extend to 125, but that's the cap for the stock. But whereas BPCL, if we see, then the stock has been in a long unwinding structure, and even though the pullback has been extending for quite some time, but I believe that now it's quoting at a very important support, and yesterday there was a short-term breakout on the chart. So I would go with BPCL as a buy, because the outperformance in BPCL among the OMCs actually continues. So we can look for a target of 490 from a perspective of about a week, and stop loss can be maintained at 460.
Okay. Stay on, gentlemen. We're just minutes away from market opening, and we'll tell you all that you need to know to stay ahead in trade today. Market regulator SEBI may initiate a forensic audit into the books of Infosys as it probes the whistleblower allegations of the alleged financial irregularities, as per a PTI report.
Amongst earnings reported after market hours, HDFC Life's annual premium equivalent rose 31%. On the other hand, Biocon's results were below street estimates.
Harihar Industries looks to raise 400 crore rupees through a QIP. The floor price of 518 is a 1% discount to Thursday's closing price.
SpiceJet chairman Ajay Singh expects better cash flows for SpiceJet towards the latter half of the year. He says this in an exclusive interview to BloombergQuint.
JSW Steel along with Ultratech will be the two nifty companies reporting their third quarter numbers today.
And lastly, in key brokerage calls, IIFL maintains a sell rating on Shree Cement with a price target of 13,800 rupees. It's the brokerage sees risks of an EBITDA decline in FY21.
Harry, comment on this, rather, the cement space. Ultratech reporting numbers today. Shree Cement already has run ahead of its, since the last month or so, it's seen buying interest coming in. Do you feel they'll be able to deliver? Because volume growth may not come in.
No, I think there is a big bet that the government is going to spend large-scale money on infrastructure, and I think cement could be a kind of a logical beneficiary. Also, I think certain parts of India have seen some positive price movements, although there has been no run. For example, Hyderabad, Chennai, these are the markets where you have seen good traction as far as cement prices are concerned. I think what is happening in the cement industry is something different. for about 40 years, it was about Gujarat Ambuja and ACC. Now, both of them are not really the key players of cement any longer. The real, what I call the swing players in cement today are Ultratech and Shree. So, it's probably these are the stocks that are going to consolidate, become bigger. And look at Ultratech's capacity. I think they are much more than the second largest cement player. So, it's more about a consolidation of the cement industry. And investors are betting that probably the two biggest beneficiaries of any cement price hike in future should be Ultratech and Shree. So, from that perspective, yes, valuations are rich, but I think they should sustain these kind of valuations.
A lot of weakness today. Zensar Tech is starting off 8% lower, but more importantly, PNB Housing Finance, which cracked post results yesterday during market hours, is down another 7%. So it was down about 5% yesterday. It's down another 7% today. I think brokerages and some MNC brokerages have cut the price target out here as well to, 525, 500 or from targets of 700. I think Credit Suisse is one of those brokerages, and there is weakness personified. This stock is. Kunal, quick call here. Do you track this one? What levels are you watching out for?
If I talk about PNB Housing unit side, then the stock is clearly in downtrend since September 2017, where it was sitting near to 1500 and 1600 zone. From there, it's clearly making lower top, lower bottom, and there is no ray of hope as of now on the chart. If you look at even positional charts, there is no downside support available because these are all-time lows available on the counter. So I would avoid the counter for time being before accumulating. I cannot even think of buying as of now. Let the consolidation happen, and then we may think of taking a bet on a longer side as well.
Okay. Do you look at this fundamentally? What do you make of the asset quality issues?
I think there are two problems PNB Housing has apparently had. I think one is asset quality, and a lot of the PNB housing loans have been linked directly or indirectly to the parent. So I think that is beginning to show some kind of a stress. The second point we also see is that the cost of funds which PNB Housing had, which used to be probably at par with most of the other bank-related housing finance companies, I think the cost of funds has gone up marginally. So I think that has also had an impact on the net interest margins. And we would believe that at these prices, probably most of the good things about PNB Housing are factored in. So we wouldn't be too keen on buying. We would probably look at lower levels. I think 400, 430. That would be the kind of a level we would seriously start looking at this stock.
All right, Hari, we'll leave it at that. Thank you so very much for joining us this morning.
Thank you.
Top calls from our technical experts. And Kunal, I'll come to you. One stock for the morning.
Again, the first recommendation which I gave for the day was Endurance Technologies that let's get opening again today. So I think on a decline cover yesterday's closing, which is near to 11.15, 11.20, one can think of going long. I think this consolidation breakout can lead the stock to a much higher level.
Okay. What about you, Shubham?
So my top call will be Manappuram. The stock has been forming a continuation pattern, and yesterday there was some move from there. So Manappuram is buy from a 2 to 3 days perspective for a target of 195 with a stop loss at 178.
Okay, Jamin, stay on. We'll just take in some opening thoughts from you post-market open and then wrap up the conversation with you. But here's how the markets are starting off today. Likely to be flat. Don't expect too many fireworks on open. The question is, can we build on from there after yesterday's up move? So flat for the Nifty, 2 points in the green. Flat for the Sensex, about 16 points. The Nifty Bank, about 84 points. So that's not doing all that bad. We'll get to what's leading to the Nifty Bank doing okay. But very, very flat start in general for all the three key benchmark indices. The mid caps and the small caps, which had an outstanding day yesterday of trade, start off on a flat note. So 25 points for the mid cap index, small caps just about opening in the green. Get the heat map up on the screen and let's see what's leading the banks higher. So there's some gains in Yes Bank, yes, but that's not a heavy weight. ICICI Bank about 0.5% higher, so that might be helping the bank index. Axis Bank is helping the bank Nifty as well. IndusInd Bank marginally, and HDFC Bank. So the private sector banks seem to be doing okay for themselves, which is helping the bank Nifty. But IOC up about 2%, the principal gainer, some bounce back for Coal India in the session today. Z, very choppy these days. Z, very difficult to trade, I guess. It starts off in the green. Asian Paints and BPCL are amongst the other two which are starting off well in trade today. But a lot of green, very little red. What is not doing well? Power Grid down another 2.5% in the session. Some weakness in Infosys, though not very pronounced. Less than 1% for Infosys. That's the key. I mean, the market doesn't worry about this too much seemingly. There's Wipro, which is down, and Kotak Bank looks like starting off weak in the session today yet again. So that's the other one that you should keep in mind. A couple of result reactions and a couple of stocks which are moving around in the last few days. So firstly, stocks which have come out with numbers and are seeing some earnings impact. So Biocon 2.5%. Chola is okay, but Zensar Technologies is down 11% after that operational miss that they showed in the quarter. No surprise here that the stock is corrected the way. The quantum could be debatable, but it's corrected, and rightly so, because the numbers weren't the greatest. What about companies which have been on an uptrend the last few days, trading at fresh highs or around that? AU Small Finance Bank, Westlife, as well as NIT Tech. Save for NIT Tech, the other two are starting off well. Keep in mind, NIT Tech valuations and the recent run-up has been pretty strong already. Devina, what are you spotting?
Look at Biocon, HDFC Life Insurance on the back of numbers, and the result reactions in pre-open were negative. Biocon opens down with a cut of about 2.5%. HDFC Life 2 trades with a cut of almost 2%. The other one is KI Industries on the back of the approval of the QIP. The stock's up about 2.5%. And then you've got an Electra Green Tech on the news of it getting an order of 555 electric buses. That stock, a smaller name there, but is up about 3.5%. What else is losing out? We already spoke about Zensar Tech and PNB Housing Finance. These are your top two losers on the Nifty 500. Then you've got the likes of Den Network down 3%. Magma FinCorp is down about 3%. Adani Enterprises 3% lower. ITI, HDIL, LIC Housing Finance, NIIT Tech, Granules India gives up a bit. Rallis is down. And then you've got Adani Transmission, Radico Khaitan, MTNL. Some of your other bigger losers. Amongst the gainers, All Cargo is up about 5%. You've got Suntec Realty, which we spoke about in Bloomberg Edge. I think Yash highlighted that stock. That stock's opened with gains of 2.3%. Central Bank of India, Chennai Petro, Gujarat Gas, IOB, Oriental Bank, all of these names. Godrej Properties is at 1,036. That's up another 1.6% in today's session after that big 6% pop yesterday. So watch out for all of these names. Quick opening thoughts from our technical experts. Shubham, through the day, is there anything that you're going to be watching out for?
If you look at the Nifty seems more consolidating, and I don't think a big move either way is expected today. But stock-specific moves continues, and the call on the buy side and the sell side. So on the short side will be Biocon, because if you look at the setup there in the morning session itself, we have seen that a lot of shorts have started coming in the system. So I think the stock can slip to the level of 278. So that's a short with a stop loss at 292. And a buy call on HPCL. So if you look at most of the oil marketing companies, that has actually been doing well, and HPCL is building up well in today's session. So HPCL is a buy for a target of 258 with a stop loss at 244.
Okay. What about you, Kunal?
Looking at the index itself and the way it's open and the right now it came down significantly, I think Nifty and Bank Nifty itself can be taken as a short opportunity. Nifty, the level which I'm looking out for is 12,160. So below 12,160, I would think of going short if Nifty sustains at that level for at least 5 minutes and keeping the stop loss of day high and then think of going short. On the other side, Bank Nifty, certainly the trigger level is 30,950, which is near to the present level itself. Presently trading at 935, 940. So if it sustains at this level for next 5 minutes, one can think of shorting Bank Nifty also, keeping the stop loss of day high. On the lower side, we can expect 30,650 to 30,500 in a day.
All right. Gentlemen, thanks so much for joining us and giving us your perspectives. Really appreciate your time. Rajat Jain, CIO at Principal Mutual Fund, joins us right now with his thoughts on the markets and specific themes as well. Rajat, good having you. Thanks so much for joining in. Bullish, bearish, neutral currently, Rajat, with all that's happening and the kind of moves that we see at the broader end of the spectrum.
Good morning, Neeraj. Good to be with you today.
Pleasure is ours.
The markets, the markets this year, I think in the near term, I think the market's sort of waiting for the budget. The sense is because the markets at least expect the government to do some sort of heavy lifting to help the economy. I mean, there's a slowdown in the economy, we know. And the governments do. So one of the things that we're getting into the budget is the sense that certainly the fiscal deficit target will be breached because we know the revenue numbers itself have not been holding up, and the market is okay even if we have if that money goes into capital expenditure and supporting infrastructure spend. We know that private capex is still going to take a while before it comes back on stream. So the government has to do the heavy lifting on that. And some sort of I guess, tinkering on the income tax and so on and so forth. But essentially, so to answer your question, in the near term, market just waits for the budget. But if you step back a bit, I think for the calendar year 2020, we still expect, I think the consensus view is that the Rabi crop should be, at least moderately or better, good or better. And that should lead to some sort of a demand pickup in the rural areas. So second half, probably we see better numbers coming from a certain set of companies. So first half, not a great time. Second half calendar should be a better time for the companies per se. So overall, an average year for the markets, but still a positive, probably high single digit, low double digit sort of returns for the markets for the calendar year.
Are you skeptical of any kind of demons or surprises coming up from the credit markets in the near term, or that picture looks relatively okay?
I mean, this is okay, it's been a set of like falling dominoes in some way, if I don't know if the analogy works, but yes, some. So you've been seeing incrementally some of those surprises coming. We don't expect major surprises coming out going forward. Because the company, I mean, if you look at the banks themselves have provisioned adequately. There are some cautiousness, I wouldn't say concern, but cautiousness among the banks on the retail side of the book. But on the NBFCs per se, I think the NBFCs, so large ones, they've slowed down. They are, broadly, we don't surprise from the large ones. The smaller ones, I think even the smaller ones, we don't expect major surprises for them, but then you never know. But certainly, I mean, to your question, do we expect major credit surprises? Hopefully not going forward. Plus, I think the environment, I think the banking system, the government, all of them realize that one of the reasons we're having this slowdown, at least one of the factors has been the IL&FS and its aftermath. So, and that has had, I think the government is sensitive to that. So probably, I mean, to the extent possible, they also would like to avert such a crisis. So I think the authorities are aware, would like to avert such a thing happening. B, per se, the companies themselves, the banks have provisioned. We, except for power sector, possibly, we don't see large surprises coming from there. NBFCs mostly done. A few ones could still come out, but nothing major. Is how I see the markets.
Rajat, so having addressed that picture and believing that the markets would be very sectors or theme specific, would you believe that your newer investments or the monies that are coming in would largely be tilted not towards the high growth areas like financials, which have done well in 2019, and maybe towards some of the spaces which provide value, maybe cement, maybe this run up a little bit, or autos, which are providing a little bit of value right now?
Yes, I think so. If you look at our portfolios, we haven't really had at our portfolio, so, or at least we are underweight, even if we have those, some of the very expensive, though high quality names. We have been actually building materials is something that cement and sort of things ancillary to the construction sector, say for example, pipes and so on. So building materials, including cement, is certainly a position where we are overweight compared to the benchmarks. In financials, we do have banks. Essentially, it's not PSU versus private. It's really banks who have the growth capital, and of course, in terms of the corporate book, the PSUs and the private had similar sort of challenges. It's really the private ones had growth capital; they got capital, and the most PSU banks didn't have the capital to grow, but for the probably couple of the large ones, the very large ones. So we have a couple of those names from the PSU and the private sector banks, plus select NBFCs, say focused on the rural economy, and insurance, so something that we have. So still we have a decent weight, say 37-38% of our portfolio, because the benchmark itself is quite large. So in our diversified equity fund, we would have that kind of weight in our portfolio for these financials. Building materials is certainly something that we look at, neutral on IT, It's really coming from the global economy, challenges in the global economy, but we don't want to be underweight there, so we are about neutral in IT. Autos, we have, there's some value, you're right, some of them really have corrected, and there's some value in some of those auto stocks, or tactical trades in some of them as well.
Rajat, lots has been spoken about more orders that need to come in for the infrastructure space from the government. Do you see that actually materializing post-budget? Because we just had L&T's results coming out, and a lot on banking on the government orders. Do you feel that that is something that one needs to keep be mindful of, and therefore investments into the infrastructure space can be a bit delayed?
If you look at areas in infra which have seen progress, clearly roads, we know, railways is something we know. There's work going on in railways, in roads, select port capacity, airports potentially. So urban infra to some extent, but roads has been the big thing, and unfortunately, with the land cost, at least the price that the government pays for acquiring land, having gone up very substantially as an account of the changes made to the law a few years ago, it's virtually very difficult, if not impossible, very difficult for a BOT project to come up. So it has to be an EPC order, EPC sort of a work given, which means that the government does come into the picture. They do have to give those projects on EPC basis. So yes, and government has been doing, it's not at NHAI, the ministry, and both have been doing work, and we expect that to continue. But that's work is already on. So do we see a fresh sort of things coming out? Like the usual progress will continue in roads. We don't see after the budget a sudden major surge of road orders, but work will continue from the government on the roads. So infra is something that we are going to see work on, but do we see a sudden spurt in activity post the budget? No. So you've got to focus on companies who balance sheets are broadly repaired, who can take a bit of working capital stress, because the government is not always a great paymaster. You get the money, but there is working capital that you got to fund. So looking at those kind of things in mind, you can zero in a few companies in the infra space that you can invest in.
Okay, Rajat, thanks so much for joining in today and giving us your thoughts. Really appreciate your time.
Thanks, Neeraj. My pleasure.
All right. And well, on the note that the markets are absolutely flat, we take a break. Up next, though, we discuss the budget expectations with Mr. V.S. Parthasarathy of Mahindra & Mahindra.